Welcome to Thoughts on the Market. I'm Ed Stanley, Morgan Stanley's Head of Thematic Research in Europe. Along with my colleagues bringing you a variety of perspectives, today I'll discuss what private markets can tell us about the viability and investability of disruptive technologies. It's Tuesday, the 3rd of September at 2 p.m. in London. For the past 3 years, we've been tracking venture capital funding to help stay one step ahead of emerging technologies and the companies that are aiming to disrupt incumbent public leaders. Private growth equity markets are, by their very definition, long duration and therefore highly susceptible to interest rate cycles. The easy money bubble of 2021 and 22 saw venture funding reach nearly $1.2 trillion, more than the previous decade of funding combined. However, what goes up often comes down, and since their peak, venture growth equity capital deployment has fallen by over 60%, as interest rates have ratcheted ever higher beyond 5%. So as interest rates fall back towards 3.5%, which our economists expect to happen over the coming 12 months, we expect M&A and IPO exit bottlenecks to ease, and so too the capital deployment and fundraising environment to improve. However, the current funding market and its recovery over the coming months and years looks more imbalanced in our view than at any point since the internet era. Having seen tens and hundreds of billions of dollars poured into clean tech and health innovations and battery startups when capital was free, that has all but turned into a trickle now. On the other end of the spectrum, AI startups are now receiving nearly half of all venture capital funding in 2024 year to date. Nowhere is that shift in investment priorities more pronounced than in the divergence between AI and crypto startups. Over the last decade, $79 billion has been spent by venture capitalists trying to find the killer app in crypto, from NFTs to gaming, decentralized finance. As little as 3 years ago, startups building blockchain applications could depend on a near one-for-one correlation of funding for their projects with crypto prices. Now, though, despite leading crypto prices only around 10% below their 2021 peak, funding for blockchain startups has fallen by 75%. Blockchain has a product market fit and a repeat user problem. Generative AI, on the other hand, does not. Both consumer and enterprise adoption levels are high and rising. Generative AI has leapfrogged crypto in all user metrics we track and in a fraction of the time. And capital providers are responding accordingly. Investors have pivoted en masse towards funding AI startups, and we see no reason why that would stop. The same effect is also happening in physical assets and in the publicly traded space. Our colleague Stephen Bird, for example, has been advocating for some time that it makes increasing financial sense for crypto miners to repurpose their infrastructure into AI training facilities. Many of the publicly listed crypto miners are doing similar maths and coming to the same outcome. For now, though, just as questions are being asked of the listed companies and what the return on invested capital is for all this AI infrastructure spend, so too in private markets, one must ask the difficult question of whether this unprecedented concentration around finding and funding AI killer apps will be money well spent, or simply a replay of recent crypto euphoria. It's still not clear where most value is likely to accrue to across the 3,000-odd generative AI startups vying for funding. But history tells us the application layer should be the winner. For now, though, from our work, we see 3 likely power law candidates. The first is breakthroughs in semiconductors and data center efficiency technologies. The second is in funding foundational model builders. And the third, specifically in that application layer, we think the greatest chance is in the healthcare application space. Thanks for listening. If you enjoy the show, please leave a review and share thoughts on the market with a friend or a colleague today.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.